For decades, Japan has served as one of the most striking cautionary tales of how an economic miracle can transform into a prolonged stagnation. In the decades following World War II, Japan emerged as a global powerhouse, experiencing extraordinary growth fueled by industrialization, technological innovation, and a relentless export-driven strategy. The nation became a symbol of resilience and modernization, admired around the world for its efficiency, discipline, and economic success. Yet, what seemed like an unstoppable rise eventually gave way to what is now known as the Lost Decades, a long period marked by near-zero growth, deflationary pressures, financial crises, and a dramatic demographic slowdown. For more than 30 years, Japan struggled to regain the momentum of its golden era, leaving policymakers and economists to study the roots of its decline and draw lessons for the future. Today, as the global economy shifts its attention to Asia's other giant, China, a pressing and unsettling question arises. Could the world's second-largest economy be on the verge of repeating Japan's trajectory? The parallels are striking and difficult to ignore. China, much like Japan in its peak years, has experienced unprecedented growth, rapid urbanization, and a historic transformation from a largely agrarian society into an industrial and technological powerhouse. Yet beneath the surface, warning signs are beginning to emerge. A slowing economy, mounting debt, an aging population, and concerns about over-reliance on real estate and exports. The comparisons spark intense debate among experts. Some argue that China is destined to face its own lost decades, while others believe that its unique political system, vast domestic market, and global influence give it tools Japan never had. The answer, however, is far from simple, and whether China will follow Japan's path or chart an entirely different course remains one of the defining economic questions of our time. China's rise over the past 40 years has been nothing short of extraordinary. From a largely agrarian society in 1980, China transformed into the world's second-largest economy by 2010. Fueled by massive industrialization, export-led growth, and urbanization, China lifted over 800 million people out of poverty. Annual GDP growth rates averaged close to 10% for 3 decades, creating a vast manufacturing base and turning cities like Shenzhen into global tech hubs. However, the past decade has revealed significant cracks. China's economic growth slowed to 3% in the first quarter of 2025, its lowest rate since the late 1970s. According to official statistics from the National Bureau of Statistics, 2023 saw a full-year growth rate of 4.5%, well below the 6% target the government once aimed for. This slowdown is driven by a complex web of factors, some eerily reminiscent of Japan's challenges, others uniquely Chinese. Demographics are at the forefront. China's population, which had been growing steadily for decades, peaked in 2022 and is now in decline. The working-age population shrank by an estimated 3.5 million people in 2023 alone, the largest drop on record. Japan's economic woes were deeply linked to its aging population and shrinking workforce starting in the early 1990s, which reduced consumer demand and increased pension burdens. China's fertility rate today stands at about 1.1 births per woman, far below the 2.1 replacement level. Despite the government's efforts to encourage families to have more children, such as relaxing the one-child policy and offering financial incentives, the trend shows little sign of reversing. Debt is another looming threat. China's total debt to GDP ratio reached approximately 335% in 2024, according to the Institute of International Finance, nearly double what it was in 2008. Much of this debt is held by local governments and state-owned enterprises, which accumulated massive liabilities to fund infrastructure projects and real estate developments. The bursting of the property bubble, highlighted by the Evergrande crisis of 2021 and the more recent troubles of other developers, has shaken confidence. Unlike Japan, which experienced a gradual deflationary spiral after its asset bubble burst, China faces a more opaque and potentially unstable financial system. Defaults are increasing, credit growth is slowing, and local governments are under pressure, risking a cascade of economic setbacks. Innovation and productivity present a mixed picture. Japan struggled for decades to transition from manufacturing dominance to a services and innovation-driven economy. China, by contrast, has aggressively pursued technological leadership. In 2023, China invested over $450 billion in R&D, second only to the United States, and accounted for nearly 30% of all global patent applications. However, geopolitical tensions, particularly with the US, have imposed export controls on advanced semiconductor technology and other key sectors, limiting China's access to critical inputs. Regulatory crackdowns on tech giants and education companies have also created an uncertain business environment, reducing investor confidence. Whether China can overcome these challenges to sustain innovation-led growth remains an open question. Trade dynamics are also evolving. Japan's export-led growth was heavily reliant on access to the US and European markets. China, the world's largest exporter, faces a more complex landscape. Trade tensions with the US have resulted in tariffs, restrictions on technology transfers, and a broader decoupling of supply chains. China's dual circulation strategy emphasizes strengthening domestic consumption and reducing foreign dependence. But the shift is fraught with challenges. The country still relies heavily on exports for economic growth, and boosting domestic consumption will require structural reforms, including social safety nets and income redistribution. Yet, despite these concerns, China differs from Japan in several critical ways. China's urbanization rate is currently around 65%, compared to Japan's nearly 100% by the 1990s, indicating potential room for further growth in urban infrastructure, real estate, and services. Moreover, China's government retains significant control over the economy and has shown readiness to intervene decisively, whether through stimulus measures, regulatory changes, or direct support to key industries. The recent focus on common prosperity reflects an attempt to address inequality and create a more sustainable growth model, though it introduces new uncertainties for business. The demographic challenge, while daunting, is somewhat mitigated by China's technological advancements in automation and AI, which could offset labor shortages. Meanwhile, China's middle class, estimated at around 600 million people, represents a massive market for domestic consumption and services. Unlike Japan's aging and shrinking population, China's younger generation is still large enough to potentially fuel growth if economic conditions improve. Politically, China's single-party system allows for swift policy shifts, but risks creating rigidities and suppressing innovation if dissent and debate are curtailed. Japan's political stagnation contributed to its economic malaise. Whether China can maintain flexibility and dynamism in governance will be crucial. The global implications of China's trajectory cannot be overstated. China now accounts for roughly 18% of global GDP and is the largest trading partner for more than 120 countries. Its economic health is intertwined with global supply chains, commodity markets, and geopolitical stability. If China falls into a prolonged slowdown like Japan's lost decades, the impact on emerging markets, multinational corporations, and global financial markets could be severe. On the other hand, if China succeeds in transitioning to a consumption-led, innovation-driven economy, while managing debt and demographic pressures, it could redefine global economic growth in the decades ahead. The choices China makes now, in policy, investment, and international relations, will determine whether it becomes a new Japan or a unique global powerhouse. Historically, Japan's experience taught us that rapid growth alone is no guarantee of long-term prosperity. It is the structural reforms, cultural shifts, and political will that define the outcomes. China is at a crossroads, and the coming years will be decisive. Thanks for watching. If you found this analysis insightful, please like, subscribe, and share this video. We want to hear from you. Do you believe China is destined to become the next Japan, or will it forge a different path? Share your thoughts in the comments below.